Welcome, G3 investors. We're going to take a look at the market for the week ended February 24th. Well, the stocks fell over 1% on Friday and posted their worst week this year. The NASDAQ dropped 3.3% for the week, the S&P 500 2.7%, and the Russell 2.9%. As far as our model goes, we've made 16.5% month to date, 32.7% year to date. Most of our gains, over 70%, 72.5%, are coming from shorting, and we're crushing our benchmark S&P by 29.3 percentage points and the NASDAQ by 8.9 percentage points. If we take a look at the market, here's a one-year chart of the NASDAQ Composite Index. Well, you know, for the week, the market was afraid of or had the continued Fed rate hike fears. And then we got more hotter inflationary data that worried Wall Street, and that's probably resulted in the worst week we had this year. With the NASDAQ, you see here, dropping 3.3% for the week, and here it is it's right on top of its 200-day moving average, and it's below its resistance level at 11,600. So it doesn't get any closer than that to recessionary territory, which would be below the 300-day moving average or the 200-day moving average. Here's a chart of the S&P 500. You can see it's well below its this level at 4,100, where its resistance is, and it's sitting just a little bit above its 200-day moving average. Now, it had a golden cross that's still in effect, and that's fine and dandy, but it again, we have an index that's getting weaker. If we look at the Russell 2000, it gets a little bit stronger, but it's below its resistance at 1900. It closed it down just 10 points below it, but it looks like it's headed towards its 200-day moving average. So if that continues, I'd say that this weakening up trend is in trouble if that continues. So if we look under the hood, though, and we look at the ETFs that we trade, we have one strong ETF, and that is the Aerospace and Defense Fund, which you can see here. It's just fell back. We don't have a position in it, but it fell back off of its 52-week high. So that is absolutely the strongest ETF out there. There's a few others that I consider strong. We'll look at a couple of them. SMH, I think there's about 5 of them. That looks pretty strong. It's pulling back, but at least it's above its 50-day and its 200-day moving average. XLF, that's financials, sitting right above its 50-day. That's not looking bad. XLK, that one's a little weaker, but it still looks like it's just completing a golden cross here, where the 50 days crossing over the 200-day, which is the red, but it's a little bit weaker than the other two, but still not bad. The housing or home builders, again, fell off of this nice move up, but it is sitting just above its 200-day moving average. And again, we have no positions this week. The last ETF that I consider strong or stronger is the mid-cap 400 growth. Again, it looks like it's went nowhere for quite some time here, and it's just sitting above. So even what I'm calling strong, I'm just defining that as anything above the 50-day and the 200-day. Now, if we look at the weakest ETFs out there, we have 6 of those. XLY is the consumer discretionary. And again, that one is weak because it's fell below the 200-day this week. So it's gotten weaker. XLV, healthcare, again, trading below its 200-day. IYR. I believe that's real estate. Yeah. It's not good when real estate's below its 200-day. These are bearish looking ETFs to me, and this market's about 50-50. There's another one that is USO, the oil fund, oil and gas prices. High-O silver is pretty ugly, and the ugliest of them all is natural gas, and that is really ugly. So you got what I consider 6 strong ETFs, 6 weak ETFs. So that's about 50-50, and then the rest of them, there's about 8 other ETFs. I'm not going to look at all of them, but I'll look at energy. That's important. Again, looks like it's headed towards it's just above the 200-day. So it's still not in bearish territory, but it certainly looks like it's headed there. And of course, we can't forget the financials. Again, that looks like it's just sitting on its 200-day or its 50-day, but it looks to me like it's headed down there. Let's see, we looked at energy. What else? Can't forget the transports. Again, looking pretty weak, just sitting just above the 200-day moving average there. And of course, the NASDAQ 100 sitting just a little bit better than the NASDAQ, but it's right at its 200-day moving average. And of course, the SPY looks just like the S&P 500, and it's in trouble too. I always like to look at materials too. Let's take a look at that one. Again, setting just below its 50-day, but it's just above that. So not really looking all that good. I do want to take a look at the heat map. This is a 1-week peek at the S&P 500, and you can see there is a lot of red on the screen. All these big glam stocks, save NVIDIA, which is up 5.84% for the week. All the rest of them are really not looking very strong. I mean, and then we got a little bit of strength there with Merck and ABB drug manufacturers, which kind of pisses me off, but it is what it is. Even the energy looks bad, and the banks and the financial credit services all week. I believe it was Walmart reported, and that one held up pretty good, but who was the other one that reported? I think it was Home Depot or Lowe's or both of them. And look at that, off 7.6 and 5.8. Well, that's all for this week's video. Next week, we close out the month of February, and we do that on Tuesday. And then we'll get a look, to see if this weakening uptrend can remain intact. I'm Greg Gallagher. Good trading and good luck.